The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 25th, the magnificent, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary day. And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on it at 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, the Tiger's dead. Any ping will do. So let's go ahead and get this show started on magical, marvelous, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, mixed market out here. You got the Dow trading down 18 points, less than 0.1%. S&P's off 4, NASDAQ 100 down 23. Russell 2000 is the only indice to the upside with regard, with the exception of the spot VIX index. That's an indice that's trading up 42 pennies. Gold is up 9.50. Silver 16 pennies. Light sweet crude is flat out there. Leading the charge dollar-wise, the upside. You've got Booking Holdings up 32. AutoZone up 13. O'Reilly Automotive up 8. Alta Beauty up 5. Boeing is up about $5. To the downside, it's Google off $12, a little over 1%. ABIO Med, something along those lines, down 2.5% or $8. And Illumina down $5. That's about 1 6/10%. Of course, I want to look at what you want to look at. No request as we speak. I take that back. There was one request. Let's go fulfill that request. Your wish is my command. If we go take a look at the daily equity futures contracts, what we're going to see right now is we do not have any new profiles. Now, earlier in the day, Jay, there was a new profile that is attempting to form in the Russell 2000. Hasn't confirmed that. You know, we'll check back in tomorrow, see if we pick up a new profile there. But let's start from right to left since I mentioned the Russell 2000. And here's what we know with regard to support levels of the market profiles. Take a look at the daily, which are in the blue color, and the green, which are the weekly time frames out here. And you'll see on the Russell 2000, the June contract, the bottom of its profile weekly is 1505.88. Here's what you know about the indice that has suffered the worst of the pullbacks out here is that support is held. If you're short, you're going to be watching 1505.88. If you're short, you're watching that number on a closing basis on a weekly time frame. However, price has held support thus far, which means we really need to go investigate in the shorter term time frame what are the patterns going on inside the Russell 2000, so on and so forth. What do we know about the Dow? What we know about the Dow is prices come back and tested support of its bullish structured daily profile. That is the chart or the panel that is second from the right out there. The actual bottom of its box is 25,341. The actual low so far today is 25,377. Okay, there's 30 points difference there. It's close enough for our workout here. Support is held. Inside the NQ, it's trading with inside the box. It's not tested either the top of its weekly profile, 72.41, or the bottom of its daily, which is 72.44. That, of course, because we have those two numbers coming together at approximately that same price level, that should be pretty strong support out here. So I don't have we'd have to look at intraday timeframes there to try to get a feel for what's the message of the NQ. What has the ES Mini done? What is it doing right now? Right this very second, trade at 28.02. What's the bottom of its profile? Daily, that is, 28.02. So you got the ES Mini trading right on support, give or take maybe a couple ticks. So we'll watch a 28, or I'd suggest you watch a 28.02 level out here for the ES Mini. So there you go with regard to your profile action. What's our conclusion at this stage? We've seen support being tested in 3 of the 4 contracts: the ES Mini, the daily, the YM, the daily, the Russell 2000, the weekly. Thus far, at 1:12 in the afternoon, support has held. Now the question is that support likely to hold, right? That would make sense out there. And here I think we're going to get conflicting signals. We're just going to give you, they're just going to tell you the way that it is. Remember, we talked about the Russell 2000. We really should start there because of that weekly profile. So here we go. Let's begin by taking a look at the 30-minute time frame out here. If we take a look at the 30-minute time frame, we're going to see that it made one of those beautiful Rhodes momentum indicator bottom patterns. It happened earlier this morning when we got that nice little hammer candle. I was at 10:30 this morning. Price was pushing lower. It was doing it with less relative energy. When it closed the session at 10:30, price was above Stevie's red line. That's a beautiful thing. And it was a hammer candle. You got follow through on the very next session, and price moved higher. This is a 30-minute chart. This 30-minute chart does not answer for you or I. Why did price stop at that 15.26, 15.27 level out there? So when we start looking for turns, we like to look at short-term time frames and then keep inching our way up to see what are the messages of those other time periods. Well, if we just multiply 30 times 2, I'm really good at math, sort of good at math. That would take us to the 60-minute time frame, the hourly time frame. On an hourly time frame, we can see that the Rhodes momentum indicator signal, but what we can also see on the 60-minute time frame is 2, count them, 2. But really all we're really interested in is just 1, which is that green solid line out there, set up by the high of that Tommy DeMark setup 9 count. And that was the high from the bar at the close, or well, at the 4 o'clock time frame, I should say, on March the 22nd. That high is 15.26. You think that TD setup 9 count is important if you're trading and investing and understanding, where price is headed to, where there may be resistance, PS day resistance out there. That's why price stopped where it did. Now, you might say, oh, come on, it cannot be that easy out there. Well, we just multiply 60 times 2, and we get to 120. How am I doing on my math out here? Pretty good. Steve Rhodes with TFNN. The 2-hour chart for the Russell says it wants to continue moving higher. Ooh, we'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So before we go to a couple of questions that came in here, just try to finish up the Russell 2000 for you. I'm just going to jump up here to the 5-hour time frame chart. The 60-minute chart showed some resistance at that 1526 level. If we look at the 5-hour chart, we take a look where Stevie's red line is. It's at 1526 as well. The 5-hour chart here is showing a hammer candle, a Morningstar candle, price moving higher with some follow through. If 1526 can be attained and broken through, then 1534.70 would become the potential resistance level out there. So the Russell 2000 showing signs of some life, or at least more counter trend rally at as of 1:19 in the afternoon. Now, here, if we look at the longer term charts, remember we're looking at the weekly TAS bottom, the bottom of its box out here. Here you can see on the weekly red line, really important, that number's at 1507. So 1507 has been tested. It's held. If you see it close on a weekly basis below 1507, this tells us the Russell 2000 equity futures contract has lower to go. On the daily time frame chart out here, just to try to draw conclusions, we can see the price has pulled back to a key level of support. It's that first red solid line out there established by the most recent, time to mark set up, 9 count out there. That's the low of the session from February the 11th, and that price point is 1504.80. So how do you sum it all up out here? Hey, you close below 1504.80, you close below the weekly bottom of its TAS box out there. It says it wants lower price. At this stage, this is a game about identifying support and resistance. This is like the game of chess. The game of chess, you protect your king. You've got to know where your support and resistance is. The game of Stratego. What was that game? Remember that from when we were kids out there? I think it was Capture the Flag or something like that. Was it Capture the Flag? That was the objective. You had to have support and had to understand support and resistance for yourself and for the other player out here. Let's take that support and resistance. That's how you and I have utilized the data that we've just looked at during the first, I don't know how many minutes it is, 20 minutes, give or take. And let's apply those exact same rules. Let's just be consistent. Be consistent, Steve-O. And let's go be consistent with Kim K. Kim writes in and says, if you have time, well, we do have time. Can you give me your thoughts on EWZ? I'm bearish, and I own puts. My time frame for holding is 2 to 4 weeks if it continues its current downward trend. So let's go take a look at EWZ. Let's do everything in our power to help out Kim. Now, Kim, as we take a look at 3 time frames, where, by the way, EWZ, folks, if you didn't know, this is the ETF that is attempting to emulate some market in Brazil. I don't know which of the stock markets, but that's, we're looking at the Brazilian ETF out here. And here's what Kim knows. Here's what you know. Here's what I know. Price is below the bottom of its daily profile. Therefore, it's below support. So Kim's short. Makes sense. What do we know about the weekly time frame? The weekly time frame on Friday last week, price closed below the bottom of a bullish structured weekly profile. Let's expand the weekly profile. We haven't seen a close below the bottom of a weekly profile in EWZ since the bottoms out here in September of 2013. Last week was the first close below that. This week, intraday, we've seen a test of that level, which is 40.97. So again, support has failed. In this case here, bullish structured support. So that says, hey, Kim, bravo to you. It looks to me like you are on the right side of the trade here. Now, I'm not saying the counter trend rally won't take place, can't take place. But right now, price is below support. So good. If there were to be a counter trend rally, you would be watching the 41.92 level. I know that's not the bottom of the box. Instead, that is the point of control on a weekly basis where both buyers and sellers believe there's fair value. What buyers would have to do is overrun that area, overtake that area, take the rook or take the bishop. In essence, that becomes one of those players at that 41.92 level. Now, your target on the downside, you say 2 to 4 weeks, something along those lines. What you're watching for is 39.42. 39.42 is the bottom of its monthly bullish structured TAS market profile. That's the support level. That becomes your next target. And just taking a look at these charts out here. If I take a look at EWZ on the daily basis, we go to Stevie's other charts out here, you know, we're seeing a series here of lower lows. And I see this breakout area. Let's go back to the other chart. I see this wide price spread. I'm going to imagine there's accelerated volume, but let's not imagine. Let's make sure we peg this thing accurately. January 2nd, 41 million shares to the upside, just slightly accelerated volume. The bottom of that gap, or really the low of January 2nd, is 40.42. Where's 40.42 work in 39.42? Well, it's, you know, close enough, and really we can go to the top of the gap. That's the high of December 31st. That happens to be 38.51. So it looks to me, Kim, like you're on the right track. And looks to me like that 39.40-ish area is where price is headed back to. So thanks for writing in. Hope that helps you out. We've got a question here from Michael R. Michael writes in, says, good afternoon, Steve. Good afternoon to you. Looking at Facebook as a possible short. So let's go take a look at Facebook out here. And if we take a look at Facebook, just got to use the exact same thing that we did with Kim. And we look at its profiles, multi-time frame profiles, that is. Black Gold, Texas T. That was kind of my thinking. With, hey, let's stay on track here. Right now you're trading in between the daily profile order. If you want to short it, then you're getting close to that level. This would say, if you were just going to use the daily, I'm not telling you or sharing or suggesting that you just use the daily out here, that you would go ahead and short it at about 165.29, the top of the daily profile. Now, one reason why I would not say to do that is, first, you've got wide price spread, accelerated volume. You've got a huge gap to the upside. That took place on January 31st. And I know there's been lots of bad news in the media about Facebook out here, but it's really just been consolidating ever since that breakout. Huge gap out there, but the gap is its friend, just as the market profiles are out here. And what we can see out here, Michael, and I know I've said out here a few times, so many times, I don't want to say it again, but what we can see on Facebook is prices also above the top of its weekly profile out there. So that doesn't look too shabby. And prices, in between its monthly set of profiles out here. So it was very easy for you and I to take a look at EWZ or whatever it was, the instrument just prior to this, below the daily, below the weekly out there. That was an easy read. Here with regard to Facebook, what else do we have in the case of Facebook? And after showing that sign of strength out here on a daily basis, the first question would be, is Facebook, has it shown us any other signs out here? And voila, it most certainly has. If we take a look at the way that it made the bottom, by the way, back here on December the 24th, or really it was the 26th, it did it with that Rhodes momentum indicator signal, bullish reversal signal, the morning star, and it made its top with a shooting star. Lots of stars out here. So I can see the reasoning to consider the short. But you're not there yet. Let me ponder on that while we go pay a few bills. Steve Rhodes with TFNN. We'll be right. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're trying to answer the question for Michael. Should he go ahead and take a short inside of Facebook? And what I've done here, Michael, is I've just gone ahead and turned off the market profiles just so you and I can take a look at the pattern that really is in play out here, which is a consolidation. Let's skip the gap that we have out here. It's very clear. For me, it's a very clear consolidation pattern because we had this high out here at the March 6th high. That was tested several times. We did get that shooting star on March the 11th. You and I have looked at that, and that really set up the top of the consolidation. Then we had Facebook after its gap to the upside, pull back to this level here on February 21st. That level, by the way, the low is 159.59 out there. And we saw that area test. Now, that volume was 15 million shares. It was tested with 37 million shares, still couldn't bust through that. Of course, we know the gap to the upside was 77 million shares. So it's in this consolidation. You're towards the bottom of the consolidation. It's almost where you would buy versus sell unless the consolidation pattern were to fail out here. So for me, I think with regard to Facebook, you've got to sit tight. You've got to see this consolidation at least bust or sell it from the top of the consolidation if Facebook is able to make a move up to that level. So I hope that helps answer your question. That's what I see after just a quick, couple-minute view of it. So thanks for writing in. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. Appreciate your time.
My pleasure.
I was looking at buying calls on SQ. It's backed off a little bit this morning. And they bring out their earnings, I think, after the close Wednesday.
Okay.
And analysts are saying their earnings and sales are going to be up very strong. And I just wondered what's your thoughts on a short-term call for between now and Friday looking for the earnings play?
Sure. Okay. So here versus the taking a look at Facebook, I think the call is relatively easy. So you're gonna buy some calls on this. You're gonna limit your risk. That's the reason for doing it, and versus increase your risk. And what's taken place inside of Square today is it pulled back to a price level of 73.33. The bottom of that box is 73.44. It's rejected that level. You're in a bullish structured box out here, a profile with the center line being at 74.60, whereas the high or the top is 79.28. So support is held. It's been tested. And therefore, hey, this was your instinct. If you were trying to understand what the message of buyers and sellers is as of 1:33 in the afternoon on March the 25th, you have your answer. Support has held. If we were trading underneath the daily box out here, we would say, geez, maybe buyers and sellers of the stock know something out here. So I can see that. That's what the daily time frame chart shows us. Then you have the weekly time frame that shows that price is trading over resistance. It has for the last couple of months out here. That was at 71.78. Hasn't had a lot of movement, and we would go back to the default back to the daily time frame and say, your upside potential here might only be 79.28, which was the high on Friday out there. Now it closed above 79.28. That certainly is a achievable outcome. Not just because it's achievable, but because you've got a high volume high bar from February 28th. And what I mean by that, it was traded to that high with nearly 42 million shares. And that would say that high should be tested at some point in time. So I would say your upside potential inside of Square after their earnings is going to be the 82.78 area. Downside potential out here, well, sheesh, I wish I had a really good downside potential. The only downside potential I could give you is that what Square did was it formed this little Tommy DeMark setup 9 count, and the low happened to be February 9th. That's this little red solid line on my screen, Ron. So I'd say 70.23. If price were to close below 70.23, let's say, earnings come out, you've got your calls, and you still have you're not at zero, so to speak. If you close below that red line here, I'd say, go ahead and get as much money back as you can off that trade. But I can see the reasons why you would take that trade right now.
Okay. Well, thank you. I'm gonna put one on here, and we'll see how it works. I'll give it a play till Friday.
Let us know right or wrong. All righty.
Okay. All righty.
You bet.
Thank you.
You bet. You're welcome. Have a nice day. That was Ron in Denver, and we were just taking a look at ticker symbol SQ. That was Square. Peter in the Tigers Den wants to take a look at Goldilocks. So, Peter, for gold, we've got a contract rollover going on right now. I don't know which contract you really want to look at. If we take a look at let's take a look at the April contract. Let's go take a look at its message. So we've got several different contracts really to look at. What I mean by that, we can take a look at April. We can take a look at June. We can take a look at Stevie's synthetic contract out there. And I don't mean to be confusing. Okay, I won't be confusing out here. Let's just look at the 5-hour chart, Peter. Is that okay with you? Because the 5-hour chart is the chart that has really been spot on with regard to what gold's intentions are. But now we're taking a look at the April contract out here. Remember we talked about the game, Stratego, chess, this, that. The technical analysis, what it boils down to is understanding trends, understanding support and resistance out there, and certain patterns that are present at tops and bottoms. It really can kind of narrow it down into about 5 different ingredients. Imagine if you could just create the most amazing meal with just 5 different ingredients. I don't know if it's 5, maybe it's 6 out here, but here's what we know about gold. So gold right now, and we're in the 5-hour time frame chart, which means the present bar out here, Peter, closes in 24 minutes at 2 p.m. But right now it's trading above the top of that 5-hour profile box, 1320.20. So a close above that would be a close above resistance. We can see that price is moving higher, doing less relative energy. That's that black diagonal line. But in it of itself, you know what I'm trying to say out there, that's no reason to be afraid or have any fear just yet. Price is trading over the last time we saw resistance, the cavalry, the bearish engulfing candle that formed out here at 9 o'clock in the morning. That was back on Friday. So a close about 1320.20. There's our 1320.20 level, the top of the box and the top of that bearish engulfing candle, really the candle that it engulfed, which was the day before. That would be short-term bullish out here. That's what the 5-hour time frame shows. Let's stay with the April contract out here, and let's go put our TAS market profiles. So if we do that, our TAS market profiles, our daily boxes are going to say, well, this looks pretty good. You're above the daily. Let's get rid of the daily. Let's put the weekly. Again, this is April versus the synthetic out here. Price has made its way up to its bearish structured point of control. Now, we're going to roll here. So, now the profiles are going to change. Let me show you. Let me see if they change out here. Let's go change April to June. Do they change? Well, first, price is going to change because the contract's trading at a different value. And see, we don't have a bearish structured box out here, Peter. This says, now we're trading at 1327 in the June contract. It says it's got another 27, 37, about another $8, $9 higher to go before it runs into resistance. That's what I see when I take a look at Goldilocks. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's continue with the questions. Let them keep rolling in. This time we're going to Max. Max writes and says, can we look at ACB? That's Aurora Cannabis. ACB is the ticker symbol. Max, you're not telling me what you're doing, what you're not doing. That's okay. Let me tell you what the stock is doing. If we take a look at Aurora Cannabis, what we know is it completed a 1-to-1 A to B equals CD pattern here. It did this on the trading session of March the 19th out here. The actual price projection was 1042. It actually got up to 1032. Missed it by that much is what Get Smart would say. Now, we also know right now that you've got a new daily profile that formed. This was on the 21st out here, and it's bullish in structure. So support 880, which is what it traded at this morning, or 855, which is the bottom of the box, but resistance is 1032 out here. So it really needs to clear 1032 in order to make a run for the highs out here. I don't know if these are the all-time highs back on October 16. What else do we know about the daily time frame chart for Aurora Borealis, actually Aurora Cannabis out here? Well, if we do our wave count, because here, if we just take a look at this chart with this set of tools, there's not, other than the A to B equals CD pattern, which really wasn't confirmed until Friday, because there was your bearish reversal candle, your gap to the downside. Of course, we can see the price is trading right into Stevie's green line. That's a resistance level, 939. Are there any other topping patterns other than the A to B equals CD? So the only way to find out is it looks like this here. We'll go confirm that. Well, it would make sense. December 25th was the low for ACB. And so as it made its high on March 20th, let me just confirm that that's the low out there. Yeah, that was the low session. So what ACB did was it made that seventh wave move, letter G, as it made its highs, was completing that 1-to-1 A to B equals CD. So this thing is pulled back. And it's pulled back in essence to support, has not broken support. It would be foolish of me to say, hey, well, first of all, you're not gonna short an $8.80 or $9.28 stock. It's just a matter of trying to understand, is this thing going to pull back? I would not suggest this thing it's made a topping signal. When things top or bottom, then what's so important for you and I is to figure out where support and resistance is, because the change in character or change in trend can't begin until we see support or resistance fail. In this case, on the move lower, we've got to see support fail. It hasn't just yet. In fact, when you see those topping signals, all price has really done is pulled back to test a level of support. Again, in the case of ACB, it's 855 to 880. Now, the weekly time frame. What do we see out here on a weekly time frame? Nothing when I take a look at the chart. Let's go take a look at Stevie's other set of tools out here. And here, then, it becomes really evident. So why did the A to B equals CD pattern on the daily chart stop where it did? And then we get a, which we just knew we had a price target. Then the daily time frame also had that seventh wave that make you say, And at the same time that was going on, where price had bounced up to was resistance. That green solid line established by that time to mark setup 9 count. So it ran right into resistance out here. Still, on a weekly basis, it did what it was supposed to do. Price has not broken a level of support. This does not mean that price can't pull back. And if it does, our price target on this becomes 796 on a weekly basis. So we got 796, 855 to 880 out there as your support zone. And on a monthly basis, I don't have any signals out here with regard to what ACB wants to do. So max a million. I hope that helps you out with regard to what the charts are showing us with regard to Aurora Cannabis, which is simply that prices pulled back to support, and it's got a couple other levels of support out there. If the question is now the time to buy, and I don't know that that's the question. You didn't give me a question. So I won't go there because I don't know that was the question out there. He just asked me to look at it. Plus, we've got some other questions that have come in. I love it when each of you, guys, gals, send in a request. It just makes the show go smoother. Well, does from my end. Tim writes in and says, "Can we? What's a good entry into FITB? FITB. I don't even know what FITB is, but we're going to find out. Oh, that's Fifth Third Bank Corp out there. FITB. I should have known it, but didn't. FITB. So what Tim is trying to do is buy FITB. Holy shnikes out here. So what are we going to do? Now, here's a daily time frame chart. So here's your topping pattern inside of Fifth Third. Price moves higher, does with less relative energy, gets that bearish engulfing candle, does so on March 19th. That was our signal out here. It's signal. The price closes below support. That's the daily profile. Does it with volume, big volume to the downside on the trading session of March 29th. You're looking to buy this. Right now, price is trading below the low of the session of January 11th. Tim, that's one of those Tom DeMark set of trend lines out there. That price point out here is 24.64. You're asking for a good area? Right now, my good area would be all the way back down to December 26. It looks to me like FITB on the daily time frame chart is signaling to you that that's where price wants to pull back to. Now, the weekly time frame chart, you're now trading with inside its box. It's bearish in structure. I don't know where it's going to close the week, and it closed last week. It was right over that. We're back inside it, or it's back inside it. So 23.98 seems like a no-brainer out here, and a close below 23.98 says 22.74 out here. Then you've got a new monthly profile that formed this month, the month of March. You're trading below that 25.40. Fifth Third Bancorp, other than trying to do some bottom fishing as we speak right now on March 25th, it doesn't look good. The prognosis is keep your money in your pocket. Look for something else to buy. Wait until price gets down there, and then let's take a look at it. See what other patterns might be forming, if any. How price is approaching. Should it approach December 26th out there? What kind of volume and so forth. So right now, Fifth Third, even though I could give you a price level, it's not one that I would rely upon to go ahead and take a stab to the long side for it. So thanks for writing in, Tim. Hope that helps you out. We've got Fred. Fred P. writes in, can we give some feedback on the U.S. dollar index? Long live the king. What more feedback would you like? Now, what I don't know, what Fred writes in and says it appears to be trending up on the 4-hour time frame. Well, that's a different thing, the 4-hour time frame. But Fred, are you trading? So I don't know what you're doing with the U.S. dollar index in the 4-hour time frame. You want me to give you feedback, which I do want to give you feedback Let me just give you feedback. You asked for feedback. I'm going to give you feedback. Let's go take a look at the June contract for the U.S. dollar index. I have a 10-minute delay on this, not on purpose. It just simply has a 10-minute delay. So here what we can look, well, you asked for the 4-hour. You did ask for the 4-hour. First, I'm going to stick with the 4-hour. 4-hour would be 120 times 2, right? That would be 240 minutes. So let's go take a look at the 4-hour time frame chart for the U.S. dollar index, the June contract. Now, you said it appears to be trending up on the 4-hour. So, yes, I can see 3 higher lows out here. And when we come back from this break, because I'm just going to make you wait till the break, I'm going to tell you, I'm going to share with you what the charts say the price level is that has to be broken in order for that trending up to really trend up. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're taking a look at the 4-hour time frame chart for Federico out here, who sees that this thing has this, we can see higher highs, really from just about 12 o'clock on the 20th, but we can also see lower highs out here. So what is the U.S. dollar index doing? And so, Fred, what you would need to see specifically on this 4-hour time frame is prices trading with inside a bearish structured profile out here. That says you would need to see a close on a 4-hour basis above 96.23 as long as this profile remains in effect out here. I don't know when the next profile will form. I don't see anything. In other words, I don't see an orange bar. So 96.23 is the number. What else is up near 96.23? Excellent question. And here's where the U.S. dollar index, so if you're looking to go long here, I'm going to say not so fast because the charts say not so fast. The charts say, one, let price close over 96.23. That much you and I took a look at. But it's a daily time frame chart. Now here I've got the continuous contract. And what we can see here is on the trading session of March 21st or Friday, so either Thursday or Friday, we saw Stevie's green line turn red. When it turns colors, tells us the price oscillator is at 0. But the phenomena associated with that is we usually see price and Stevie's red or green line catch up to each other. Voila, that's what took place on Friday. And what also took place on Friday was a rejection of that red line. We now have a falling price oscillator below 0. That's bearish as far as its interpretation. Price here would need to close over 96.25, which is Stevie's red line. It's also this blue dash line out here. That's where price needs to close above in order for the U.S. dollar index, the king of beers, to get its mojo back. Otherwise, this could be pulling back even further. You'd watch 95.81 for the level of support. So I hope that helps you out, Fred. Thanks so much for writing in. Thanks so much for being here, folks. Stay tuned because your favorite polar bear, David White, he's up next. After that, Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Take care. Have a great day.